Hi there, and thank you for joining us for this episode of PhillipCapital's Market Watch. I'm Phil Gunn, Senior Sales Manager from Phillip Nova. Recently, we have seen a surge in another major asset class, silver. Alongside gold, silver prices have made historical highs. What is driving this rally, and what can we expect from silver in 2026? Let's dive right in. Since the beginning of June, spot silver prices have been spiking higher. It is now trading as a new high of $63, an increase of over 85% for the past 6 months from $34 per ounce. Silver plays a crucial role in modern technology. It is widely used in electronics, solar panels, electric vehicles, battery systems, and other advanced manufacturing due to its superior conductivity and other properties. The global shift towards clean renewable energy and infrastructure, such as expansion in solar energy, EV adoption has boosted silver demand significantly, turning it into an important industrial commodity. Unlike gold, which is primarily a monetary or investment asset, silver holds a dual role, a key industrial metal and a store of value. As economies become more technology-driven, the industrial side of silver demand has become increasingly important. This structural shift is helping to sustain higher prices beyond just speculative or cyclical spikes. On the supply side, the silver market reportedly has been in a multi-year supply deficit. One major reason is that much of the world's silver is a byproduct of mining for other metals like copper, lead, zinc. This means silver output does not adjust quickly even if silver demand rises sharply. Since supply is relatively inelastic, even sustained demand increases can lead to long periods of tight supply, creating upward pressure that can persist. With rising global economic uncertainty, inflation concerns, and the volatility in financial markets, investors often flock to tangible assets, and silver has regained its appeal as a safe haven metal, somewhat cheaper than gold, but with many of the same characteristics. Additionally, expectations of falling real interest rates, for instance, if the Fed lowers rates, it will reduce the opportunity cost of holding non-yielding assets like silver. This makes precious metals more attractive relative to cash or bonds. Broader macroeconomic trends such as inflation, weakening currencies, and concerns over fiscal instability or debt will lead to support demand for hard assets. Silver gains from many of the same forces that help gold, but with amplified volatility given its smaller market size. Let us look at the trajectory of silver prices. Shown here is the daily chart of the spot silver. Prices have breached the resistance level 54.28 and are now on another wave of uptrend since it has breached the second resistance level at 59.25. Given the buying momentum, the possibility of creating new highs remains. In case of a retracement scenario, the first level of short-term retracement will be the support level of 60.89. This could be followed by a consolidation around 62.98, which is the 1.00 extension of its previous wave movement from 37.09 to 54.28. If it goes for a deeper correction, it will be heading for the 61.8% Fibonacci level at 56.32 or at the resistance turn support level of 54.26. If the buying momentum persists, there's likely a chance it will be heading towards $67.72 per ounce. And that's all for this episode of PhillipCapital's Market Watch. Do remember to like and follow us on social media and subscribe to us on YouTube. Also, let us know in the comments section. Will silver prices continue to rally? Thanks for joining us, and we'll see you soon.